Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, sometimes I can go weeks without any buy or sell recommendations, but I got to go with this. I have another buy recommendation for you. This will be number 9, and it is silver and the silver ETF, which is what retail investors buy. Symbol SLV. Timing on these are everything. So let's get into it. This is the 4-year chart of SLV, of silver. And so this is considered an intermediate term chart. It's a weekly chart. Each one of these bars represents a week of price action. And you can see you can't see the whole pattern down here, but this was a consolidation in the form of an inverse head and shoulders pattern that gave me a $32 price projection when it was at 25. Nobody was buying silver back then. In 2023, it was kind of dead money. And so, my initial buy was January 15th so this would have been 2025 at 27.96. And I sold it in April, a couple of months later, at 28.89. No big deal. And then I bought it again at 29.55, and that was in April, a couple of weeks later. And then I sold it in August at 34.50, exceeding the price projection of the pattern over here. So I thought, oh boy, I'm doing great. Then the thing shot out of a cannon, which I missed. I was in other things. I was in platinum. I was in uranium. I was in gold miners. I was in a lot of different things. But anyway, I think we're getting a chance here to buy it. And after this blow off top and this big bearish engulfing pattern, where for the week this red candlestick engulfed the prior 2 weeks, actually, you knew there was a change of character on huge volume. And down we went from 110, let's call it, down to around 60. So some people really got punished on that. And this is called a falling wedge, which is bullish. In an uptrend, you get these wedges that they're corrective, and you can see all the overlapping price action, which tells you it's not a new direction, or probably isn't a new direction of down. Like this tells you that the trend is up. When you get all these overlapping kind of waves, it tells you that it's corrective and it's working off this huge overbought condition that we had. So we're going to take a look at this. It'll give you a better idea of why I'm suggesting right now. So here's the falling wedge. And we had a slight breakout 2 days ago, and we had a bullish hammer the day before, so that would have been Monday, kind of when all these other tickers, the S&P and the XLK, the technology ETF, they all had bullish hammers on Monday, and we had a breakout 2 days ago on Tuesday, and then on Wednesday. I got the days mixed up. And today, not really too much. So the reason why I want to buy this is, and the reason why I buy patterns, I'm a pattern recognition guy, technical guy. I use other tools too, but that's what I like because I like to know where my reward is and where my risk is. So when I buy this here, I know that my stop is on the low of this bullish hammer. If it exceeds that on the downside, then this pattern is no longer intact, and then I really don't know where I'm at. Then where do I get out? So this is kind of, it'll limit my loss to approximately 10%, which is a lot. But you got to remember too, trading this silver is just so volatile. Probably silver, natural gas, some cryptocurrencies are probably the most volatile securities that you can buy. So, we had a similar breakout with platinum. Actually, we bought it just before it broke out, but that was like a 3-year base. But the reason why I buy those is sometimes when these break out like this, they can be up 10, 12% in one day. And I'm not going to chase, I'm not going to buy it when it's up here because then, where's my risk? My risk is way down here. And my potential reward, I think that this should hit a new high. Let's call it 110. Um, it's not as attractive. The reward to risk is no longer, it's still good because this is such an attractive reward to risk right now, but it's not as good. So I like to buy this to limit my downside and of course to get as much as I can on the upside. I hope that makes sense to you. Oh, my stop is 62.5, so right here. Point and figure chart saying, you know what, we got a bullish trend line. That is great after this huge correction. So when, prices are that far away from your trend line, that's telling you you're way, way, way overbought. Um, and when it comes back down and it's sitting on your trend line, again, you know that your risk is pretty small because if it breaks this trend line on the point and figure chart, it tells you that you now have a bearish trend line and you better watch out. So I like buying it as close to the trend line as I can. This is giving us a point and figure chart's giving us a price projection, it looks like of 82, which is still good upside. Yeah, I'd be happy with 82. I'm going to gold. I was going to show you. Thought I had a volatility chart on silver, which is come down a lot. Um, anyway, volatility has calmed down in silver, meaning that it's not as risky to buy as it was, say, 3 months ago. So that's another thing in our corner. I want to just show you gold. I mean, I really want to buy gold over silver. The volatility is less. People use gold for other things, for safety purposes, where silver is more of a growth and speculative metal, precious metal. So, but gold just doesn't have the same setup. I don't have the breakout of the pattern that we have in silver. Where would you put your stop here? Way down at 4,100. I expect both of these will go together. They normally do, but I look at charts without a name on it. So wherever I get the best reward to risk, that's where I'm going. As you know, I'm also bullish on platinum. I have a buy rating on platinum, which has been off to a good start, knock on wood. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Tell your friends, neighbors, family. Have a great evening. Happy Friday tomorrow. Adios.